Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online, and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look at the market, which is fully red at the moment. Miners retreating anywhere from 2 to 6% across the board. In addition to that, Anthony's now put together his September comparative tables. We've got some new metrics to present and a great update on our Miner Madness Q4 Bitcoin mining trading competition. Now, before we get into all that, please take a second, smash the like button, you guys. Feel free to subscribe. We're just about at 46,000 subscribers. We'd love to have you as part of the community. And finally, leave a comment in the section below. Let me know how your portfolio is looking today, if you're buying on this pullback, and where you stack or rank in the Miner Madness competition. Now, with that being said, let's get into today's video. Okay, guys, here we have it. Wednesday morning, red across the board today, Anthony. We've been having a number of green days in the mining sector, some strong recovery trading sessions on Monday and Tuesday. But today, looking across the mid-morning market update, most of these stocks are trading towards their low for the day and a red in the neighborhood, as I say, of about 2 to 6%. Anthony, Riot is holding up the best here, down about 2%. CleanSpark performing the worst today. Anything standing out on the mid-morning market update here for you?
Not really, no. Bitcoin's pulled back a little bit. Mine is just following suit, so nothing really, too much. Bear in mind, just think about what they've done over the last sort of 3 weeks. So the biggest 3 movers in the last few weeks are, I think, Soluna, CleanSpark, CIFR, Riot. So no shock that some of those have, maybe a bit of profit taken in some of those stocks. But we know that there's volatility. As soon as Bitcoin price moves up or down, some of the miners follow suit, and it's a bigger percentage. So not like for like, more volatility in the mining stocks.
Most definitely. And the other interesting column here, Anthony, I just wanted to quickly call out to the viewers. If you look at the 52-week range, you can see almost all of the companies, aside from 2, are in the bottom half of that range. I'll give you 2 guesses, Anthony, who the standouts are: Core Scientific and TeraWulf, obviously with those HPC contracts. Can you give us a little bit of understanding why Wall Street is liking this type of revenue so much more than, say, the pure pay Bitcoin mining right now?
Absolutely. The major difference between the 2 business units are effectively predictability of revenue. So we know now, having that signed contract yesterday with CoreWeave and Core Scientific, the revenues over the next 12, 13 years will be at 8.7 billion. That's priced in. And they know what the margins are on that contract as well. So 6.2 billion net profit on a contract over 13 years. That's well over 1.3 million dollars a day. It's a big contract, and with Bitcoin mining, we're all hoping the price gets to 100,000 or 200,000, but to compete with that type of contract, the Bitcoin price would probably have to get closer to 200,000. If you're looking at 71% net margins, what would the Bitcoin price need to be for some of the most efficient miners like CleanSpark, like IREN, like Riot, like TeraWulf, like CIFR? What would they need to have the price be to deliver that amount of net profits? And bear in mind, in terms of profits at the moment, most of these mining companies are effectively break even at the moment on the Bitcoin price at 66,000. So where does it need to be to get to 71% net profit covering all your costs? And that's why the Wall Street like it at the moment. Yes, they need to be more educated about Bitcoin. Maybe get Michael Saylor to do a few more trips there and give them some education in the space, because listen to Michael for half an hour, we'd all go out and buy a few more Bitcoin and store it away. But they're not getting that, but they do get the HPC because they like predictability. They like to know when the revenues are coming in, what the costs are involved, and if there's margins there, they'll price accordingly. Interesting enough today, Compass Point came out and gave Core Scientific an upgrade to $20 a share based on the news yesterday. And they're being absolutely prudent on that. They're only giving it 15 times net earnings for the HPC side, and they're giving it 8 times earnings for the Bitcoin mining side. So they're even more prudent on the Bitcoin mining side. There's a bit more risk involved there. And they're also accounting for the fact that Core Scientific will need to spend of their own money. This isn't the money they're borrowing, but they'll have to spend 750 million as well of their own money to deliver the sites that are required to be refurbished. So they've looked at all the numbers in this there. That's one analyst firm, one big investment bank down Wall Street coming out and saying they think, Core Scientific is fair priced at $20 at the moment. So, and there's an upside to that. I mean, if the revenues start coming in as predicted, they're also saying that you could start looking at 20 to 25 multiples as a valuation. So they're only saying 15 at the moment because, like anything, there's a contract signed, but next year might happen and something else might happen there. But the issue is that the upside to this contract is that CoreWeave looks like they're going to IPO next year. Now, bear in mind, as a non-public company at the moment, they're valued in many, many billions, probably as much as most of the miners added together, to be honest with you. So when they come to IPO next year, how much do you think that's going to raise in cash, in equity then? And that will be a sort of a beast of a company. And so if that happens, then the reality is that this contract, gets seen through to the end. Its potential to maybe have extensions above the 12 years as well. So I'd be sitting quite well holding my Core Scientific shares at the moment and my warrants, ready for the upside, because I think there's more. At the moment, the conversation's still around the HPC. I want the Bitcoin mining price to rise up, and people say it's going up. And we try to believe everyone, but the price is still stuck in the mid-60 range, and it's been sort of in that range now for about the last 3 months. So hopefully we start seeing some more positive move upwards from Bitcoin mining.
Yeah, very interesting, Anthony, when you start looking at some of the multiples that Wall Street gives the data center side of the world compared to the traditional Bitcoin mining. And you and I both concur with that analysis, thinking that Core Scientific is undervalued, even based on this contract, not to mention the value of all their equipment if Bitcoin starts to move up in the right direction, and the margins on the Bitcoin side getting even better or more lucrative for them. So with that being said, we now wanted to shift gears a little bit. We've put together this September analysis, the full monthly review. Anthony, you've added a few new metrics this month, which I think the viewers are really going to like. So let's open up maybe with the summary table here. You can walk us through exactly what we're seeing, maybe some key lines to take a look at, and then we'll get into the more detailed graphs.
Yeah, so just to set the scene for September, we saw the difficulty rise again. It reached an all-time high of 92.6 trillion terahash, providing more added pressure to the Bitcoin miners effectively. However, to alleviate that a little bit, we saw the Bitcoin price rally by 7% and finish the end of September at 63,330. So that means, slightly less production, but more in terms of Bitcoin price per Bitcoin mine. So there's a little bit of upside for the miners there. We also saw in the month the fact that there was, some big announcements made in terms of HPC. So, that also was a good month for September. CIFR announcing their option for the 3 sites. We've seen Core Scientific and CoreWeave announced their latest deal there to get to 500 megawatts. And even TeraWulf have agreed to a new 35-year ground lease agreement at Lake Mariner. And, they'll expand the site by 50% to 157 acres. And this gives them exclusive access to 750 megawatts. Now, the original site had 10 years to run. Now, by extending it to 35 years, and there's an option to extend for a further 45 years, that takes it to a total of 80 years. This gives them, the necessary years to expand into a high-performance computing or AI data center contract with a large provider. Sort of similar to sort of what Core Scientific have done there, having the land for a long period. Core Scientific's deal effectively runs over the next 14 years. So that 10-year site plan at Lake Mariner wasn't probably sufficient to entice some of the big players into the market, like the Amazons and the Microsofts. But now, with potentially 80 years, that puts them in a more stronger position. So going through to the sort of like the monthly tables, in the main, most of the miners actually mined less Bitcoin. There were a few exceptions to this there. So we had DMG had a great run finally installing the T21s, and that took their hash rate to a new high of 1.6, due to get to 1.7 very shortly. So they were able to mine effectively 13.2% more Bitcoin per day during the month of September than they did in August. Hive Digital also were able to mine slightly more Bitcoin. They got the hash rate to 5.6 exahash. We talked about Hive quite a lot because, they're able to produce Bitcoin at a fairly low operating cost. So G&A costs for them are quite low. So they're not grown hash rate as much as some of their peer miners, which I suppose from a shareholder's perspective is disappointing. They have got a big plan to grow into Paraguay and get that hash rate well into double digits. I think 12 to 13 exahash, sort of before this time next year. So in the next sort of 9 to 12 months, they'll have that up and running in a site very close to the Bitfarms site there. The biggest riser of the month was IREN, and IREN managed to get their operating hash rate from 10.5 up to 16.5. So a massive jump in hash rate for IREN, and they were able to really start moving with the Bitcoin in there. And actually their end of month hash rate is 21 exahash. So as they start in this last 10 weeks, putting these last few buildings into operation to get to 31, we'll see that hash rate start growing as every update comes out. So and final word probably goes to Riot, who also saw big increases in their hash rate and also their operating hash rate. So their operating hash rate grew as well by 5, and they've increased their day-to-day Bitcoin mined by about 32%. CleanSpark, we know that they've now gone to 30, but that was post the end of September. But again, 30 is a good target to achieve, and they've got to get to 37 by the end of the year. So all in all, it was it was a fairly good set of numbers when you consider that the difficulty did affect them. No miners were sort of like really low on numbers in terms of what the expectation was. But there were some good updates from a number of the miners who actually managed to increase their hash rate and keeping up with the global hash rate in terms of growth.
Yeah, most definitely. I would say a pretty strong and consistent month across the board, Anthony. Now, you just started talking a little bit about Bitcoin mined month over month. The next table looks at Bitcoin mined in September, ranking them in order. So we now have Marathon, Riot, CleanSpark, and IREN really pushing for that top tier category. Do you think we're going to see this ranking start to shift and potentially overtake Marathon in the next month or two here?
So CleanSpark looking very good this month to possibly finish top, but Marathon have got this big target to achieve by the end of the year. They were at 36.9 exahash as we speak, or as at the last update, end of September. They've got a target of 50 to get to by the end of the year, so it doesn't give them much time. Now, I'm assuming that some of that target will come from actually just removing miners and putting in more efficient miners. So getting rid of some of the S90 models, which are 30 joules a terahash, maybe putting in some of the S21s, which are 15 joules a terahash. That means you can replace a miner and get effectively twice the power or more than twice the power. And so that would help them sort of get there. But CleanSpark certainly en route to catching more, and that gap will be a lot closer than what it was in September. So 705 for Marathon, 493 for CleanSpark. Riot, we know they're growing hash rate, but the operational hash rate is still a big gap between operational and plugged-in hash rate there. So, but we've as we said on the last update, we're starting to see the green shoots. So Riot were doing, less than core scientific and IREN in previous months. So they've now gone back into third place, and hopefully they'll start to to gain ground on where they are, start getting that operational hash rate sorted out at the Rockdale facility. We know that building B2 is not far away from being completed at Corsicana. That gives them, another 100 megawatts of additional power there, and I think it's 4 or 5 exahash in terms of hash rate to go into that particular building. That gets them closer to their 36 target for the end of the year, so not too far to go from them there. And in the rest of the pack, it was pretty much, as was, in previous months, really, not massive growth there. But I've already explained the biggest ones to look out for this month were IREN and Riot in terms of growing that hash rate, growing operational hash rate, really good increases in Bitcoin. And that's what you need now as the Bitcoin price hopefully starts rising. It's good for both of those.
Yeah, it'll be really interesting, Anthony, to see how the month comes out in October here as we see these big exahash gains coming online, specifically in the case of Riot operational, as that's my top pick in the Miner Madness competition, which we're going to come on to in a second here. Now, the next table, rank by production per exahash. This one's interesting, Anthony. We used to see quite a big spread in this metric. It's really starting to compress or narrow in terms of the gap between first and last place. Why is that happening?
I mean, to be honest with you, this table should be level for every miner. Every miner should be at the same level, because all this is about is if your hash rate's on, you're delivering Bitcoin. So if you're maintaining your hash rate, you're delivering Bitcoin. This will only really impact certain things like a very small element of luck, minuscule elements of luck, and then things like servicing, maintenance, some curtailment. But a lot of the miners put the operational hash rate in now, so they're obviously taking account of some of that curtailment because the operational hash rate is lower than the energized hash rate. So hash rate that they physically installed would be energized hash rate, and then the actual operations, how they run for the month, would be the operational hash rate. So, and we'll come on to another table that sort of highlights that in a bit more. Goes here, but this is like showing now that the miners are delivering what they're expecting to deliver, and there's only looking at that table, there are only 3 that aren't really delivering close to where they should be. So Marathon, Core Scientific, and HUT. We know that HUTs have a small amount of self mining now. I think it's like about 4.7 exahash, and if you look at what their main focus, they're delivering, managed services and hosting services, and they haven't really improved their self-mining. So in terms of machines, these machines are probably S19s or even worse than S19s in terms of the hash rate. I think it's probably 32 joules is maybe their efficiency. So that doesn't help in terms of, getting profitable Bitcoin. The one thing on their side, though, is the fact that they've got one of the cheapest energy rates. So I think it's only about 3.1 cents a kilowatt hour. So where you have less efficient miners, you can receive some upside by having really cheap energy, because some of the other miners are paying 5 cents. So there's a big difference there in terms of, 40% more, 50% more for your energy. But you might have a more efficient fleet. So there's a balance. If you can get both of them, you're rocking. So, IREN have a really good energy price now, with the main rate in Texas, in the low 3 cents a kilowatt hour, and they've got the most efficient fleet at 16 joules a terahash. So it's a win-win for them. And some of those other miners in Texas, CIFR also will be doing quite well at some of their sites where they've got the low cost of power agreement in there. But this is where it should be. The thing was, for the last 4 years of producing this table, it hasn't always been like this. This has probably been the closest month since I started in terms of this production. So, the relevancy may be not as big as it used to be, and that's right. It should be an irrelevant table because everyone should be mining the same level.
Yeah, it makes sense for sure. Now, the next table we have Bitcoin sold by percentage of production. Only one miner is truly 100% hodling right now. It's Marathon. There's some very small fractional Bitcoin going out from CleanSpark and Riot. Many of the miners continuing to sell all their production, and then a few over-indexing. Anthony, I was sitting here the other day. I almost put a tweet out about this, thinking I personally hold more Bitcoin than IREN or some of these top companies in the world. And it really got me thinking. I just don't understand why these companies wouldn't HODL a portion of their Bitcoin, but we continue to see a lot of them selling everything they make. Do you think
Yeah.
one strategy will prevail here, or do you think there is a happy balance between selling and HODLing?
There's been a balance up to now in the way that some of these miners have sold. So if you think about the bear cycle in 2022, and IREN was selling theirs every day, all the way up to 69,000, all the way down to 15,000 at the end of 2023. That tells you, or sorry, end of 2022. That tells you that they made the best use of it. CleanSpark also sold a lot of Bitcoin per day when the prices were high as well. But we saw some of these miners like Core Scientific, like Bitfarms, like Argo Blockchain were selling. Some of them were even buying Bitcoin back in 2022 and then having to sell it at half the price because the Bitcoin price came down. So in a rising market, HODL is obviously the best strategy, but as soon as it turns, and if you know when it's going to turn and know it's going to turn by how much, then you can make a decision. The likes of Riot and HUT went through that whole bear cycle without selling their HODL. So they kept their HODL. In fact, during this sort of start of this bull cycle, Riot has started to increase their HODL significantly. But in terms of this table here, it tells you straight away who are the miners. So you've got at least 5 of those miners who don't bother with a HODL at all. Gryphon and DMG do have a HODL, and we'll come on to that on another slide there. But the likes of Core Scientific, Bitdeer, IREN, Soluna and Wulf, they sell theirs on a daily basis. Riot and CleanSpark, that percentage there reflects remuneration for directors. So it's not actually selling Bitcoin. It's part of the salary package for the senior director of the firm. And so it's still there as Bitcoin that's not going to the company. So effectively, it might not be physically sold, but it is moving away from the company's treasury position into employees' treasury position. So that's why the small percentage is there. Bit Digital, generally increase their HODL each month, as do Hive, as do Bitfarms of late as well. So those 3 miners are using their production for covering operating expenses, and then the rest of it goes into the HODL. So they've all kept their Bitcoin growing into HODL, and with the price going up as it has done over the last sort of 18 months, 20 months now, it's showing that they've built up reasonably good HODL position.
Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Yeah, it certainly is. That one is a head scratcher for me. I still think there is some sort of mid-ground, Anthony, but as you say, the timing is virtually impossible and very difficult to predict those exact entry and exit points. It'll be interesting to get more details around the synthetic HODL positions, especially now that the options have opened up on the spot ETFs, as these companies can now effectively hedge some of these positions going into or out of these cycle movements. Now, the next one, Anthony, pretty interesting here, rank by utilization. So this one, unlike the prior slide we just talked about, there is quite a spread on this of about 25% between the top and bottom performing miners. What exactly leads to this delta or spread?
So this one really looks at what they should have mined with their plugged in hash rate compared to what they did mine. So this isn't about operating hash rate. This is about energized hash rate. So if you've got the mining machines available, and we know how many Bitcoin a day those should have produced based on your exahash. And I think from the top of my head, it was round about 0.7 of a Bitcoin per day per exahash. That's what you should be producing. So you can do the calculation. Then you look at what they physically produced, and basically what this is showing is who can produce with what they've got, the most with what they've got. So it doesn't matter if you're small or large. It's not, in fact, that Gryphon and Linus, one of the smaller miners, basically what it means is most of their machines they've got their uptime is really high. That's what it's saying. So, production by operational hash rate is a level playing field. It lets people put in, if they were only operating at 50%, it lets them use that 50% hash rate. This one here tells you how big the gap really was. And so with Gryphon at 98.7%, that's as close to 100%. It's a really good indicator that most of their fleet was up and running for the whole month. And if I think even in their update they had it as high, I think as they put in the update it was like 98%. So this is equal to what they put in the update. Bitdeer as well had a really good month. And maybe some of these miners on here that have got high percentages don't bother with what we call the operational hash rate. They just put in their energized hash rate and don't bother. We know a year ago most of the miners didn't bother doing it. And we saw some big gaps, but now that most of them, even the likes of Riot, put an operational hash rate in now because they were just getting destroyed on some of the metrics. And it's not, if you haven't got the hash rate up and running, you're just shooting yourself in the foot. Really, you should be acknowledging it in the update that you're operating at this level. But this one will highlight where there are some big gaps. So if you look at likes of Ut and Riot, they're not achieving the amount of production that they should be with their plugged in or installed hash rate. So that's where the gap is there. And then, you've got the likes of Core Scientific, who we know have been focused on putting. So Core Scientific would have an argument. They've been actually moving miners from some of their sites into new sites. So there'll be a gap of doing that. We were actually fortunate to be at Denton back in June. We saw that 150 megawatt site there. And we knew that day that was going to be the site for HPC. But obviously we didn't say anything because it wasn't public news at that point in time. But the company have released the fact that Denton is going to be one of their flagship HPC sites. So, they'll have had to have moved all those machines out of that site. And that'll be a lot of machines. I've been to some sites. Well, we went to that site. It was a big site anyway, but even a 20, 30 megawatt site looks quite big. That's 150 megawatts. That's going to be moved into a different location. So that'll take some doing there. So maybe that accounts for some of their drop there. But then you just sort of start seeing, slowly and slowly, CleanSpark and Hive. We know that they've always had, Bitfarms have always had good operation numbers there. But if you look at those there, they're in the sort of like low 90s. So Bitfarms, we know, is probably one of the best operators in terms of what they produce with hash rate there. They're still not utilizing their whole hash rate. So there's still a gap of about 8.6% on what they've got installed as opposed to what they're using. And that's the way to really interpret this graph.
Now, next up, Anthony, we've got Bitcoin HODL. So we've talked briefly about these positions already in the presentation. However, what I like to think about with this slide is every $1,000 Bitcoin price moves, you essentially add 3 zeros to these numbers. So in the case of Marathon, you're looking at about $27 million in terms of balance sheet movement for every $1,000 of Bitcoin. Truly incredible as these companies continue to stack Bitcoin or Satoshis on balance sheet.
Yeah, absolutely. Marathon have been buying Bitcoin over the last few months as well to increase their HODL. Michael Saylor has obviously been giving a few pep talks to Fred and said, start using some of your balance sheet to buy more Bitcoin, and Fred's obliged by doing that. Time will tell if it was the right strategy. We know before when miners have bought Bitcoin, it hasn't always worked out, but maybe this time with the likes of the ETFs, etc., Bitcoin cycle is going to be slightly different. But you look at Marathon's HODL there of 26,842 Bitcoin. That's got a valuation as at the end of September, and that was based on 63,300, 1.7 billion in terms of a Bitcoin HODL. So you look at today's price, that's another 3,000, 3,500 a coin more. That gives it probably another 80 million, 90 million in terms of there. So getting on was for $1.8 billion dollars of HODL alone. And we know they've got a significant cash balance as well. So probably well over 2 billion for the likes of Marathon. Riot's now clearly moved ahead of the likes of HUT and ahead of CleanSpark. They've got, nearly 10,500 coins at $660 million. So again, big. HUT 8 with 9,106 coin. They've managed to maintain that HODL now all the way through. They've been using a lot of their operational produced Bitcoin to cover operational costs, and rightly so. Hive have grown a nice HODL as well. 2,604. This is a mine that's only valued at just over 400 million, and yet they've got a HODL size of 165. So you go in and buy a company like Hive, and they've got $165 million on the balance sheet. You're effectively only paying about $250 million for the company, and it's got everything. It's got a HPC business. It's got a mining business. It operates in 3 or 4 different countries. And so, really, compared to a lot of miners, we know that's one of the cheapest miners by valuation out there. CleanSpark have grown their HODL really actively over the last sort of year now. Literally every month they've been, apart from like directors' remuneration, they've been literally hodling everything else. And utilize their ATMs really well to grow the company and also to pay for all the costs that they need to do. Because while these companies are hodling a lot of it, they still have to pay staff salaries, they still have to pay the energy, still have to pay all the bills. So, a lot of them will have been using ATMs, so that's a dilution of shares, to actually create capital to pay those. Bitfarms, since they've got rid of the debt, have also been focused on growing the HODL. So, we know that they sold everything apart from the kitchen sink to get rid of that debt previously. But now they've started to, start to have a nice balance. They've got a decent cash balance as well. HODL there, worth 73 million. So that's nice. I think they've got a cash balance that takes them well over 130 million. So really good position to be in. Bit Digital have a great position as well. They've got a Bitcoin HODL of 45 million, but they've also got an Ethereum HODL, which is probably a similar amount. And then they've got like over 100 million. So they've got nearly 200 million in their treasury. And again, like Hive, they're a company that's got a low valuation for what they deliver. So you buy again, they're a bit more than Hive. I think they're over 500 million in terms of market capitalization. But it's a good position to be in for these miners because the Bitcoin price is where it is. But if the Bitcoin price goes back to where it was in December 2022 at 15,000, it's a whole different ballgame.
Well, let's hope it doesn't in this situation, Anthony. Now, it's going to be interesting as Marathon starts to acquire more Bitcoin and take on more of that MicroStrategy look and feel or strategy. If they start to get the premium that we see MicroStrategy get on their HODL, with the caveat that Marathon can actually produce additional Bitcoin at a fixed cost. So that's one to watch. Marathon definitely starting to become more intriguing, and I've seen a lot of people starting to post buys on Marathon and information. So next up is revenue by energized hash rate for the month of September. This one, again, a really interesting metric to compare and contrast these miners.
Yeah, it's just taking, we've looked at Bitcoin by hash rate, now it's revenue by hash rate, and it shouldn't be that too dissimilar from the previous slide in terms of Bitcoin exahash, but Hive and Gryphon doing really well on this slide here. And bear in mind, we'll go back and look at, say, the January position for revenue by Energized. I think it was probably close to 3,000 per energized hash rate at that point in time. So, and this is about petahash. This is amount per petahash of energized hash rate. So, it's come down significantly. We had a halving, but we've also had the difficulty. So, that's 2 impacts to the Bitcoin miners. They've lost half the revenue, but the difficulty has probably accounted for about another 40% reduction in mining. So, think about these numbers, add 40% and then double that amount, and you get close to what the position was at the start of the year. So, some of these were well over $3,000 at the start of the year. And if you look at HUT and DMG there, coming in at sort of 903, 848, probably, more work needed. But actually with DMG, you could argue that their hash rate sort of came through during the month. So we'll see a big improvement in DMG for the month of October. With Riot, because they had announced the credits that they owed, the credits take part and parcel of this as well. So they had Bitcoin mine, plus they had the energy credits, which have been converted into Bitcoin equivalents. That puts them up a little bit, and it gets them back into sort of like the mid group there. But Hive we know are strong. Gryphon have been strong these last few months as well. So some good updates for Gryphon, which will help them. They just changed effectively 2 of the senior management team there, and hopefully we'll get Steve on the podcast, in the next week or so to give us an update of Gryphon, where they're going.
Yeah, we certainly will. And good point, Anthony, that they're able to continue that level of production despite the leadership changes. We know there's only a handful of employees at the company overall. So when you're starting to change those senior positions and able to maintain this type of production, that's obviously great to see. Now, the next one is probably the one I'm most excited for. This is Bitcoin mined per megawatt. So you and I, Anthony, have been working on a plan to start to incorporate megawatt to start to offset some of the HPC exposure as these pure play miners start to find these other revenue streams. This one is I guess a first attempt at taking a look at a way to compare apples to apples in this industry. So really exciting table. Very happy you're able to put this one together. Can you walk us through, first of all, how you calculate the megawatts and then what this table is really showing?
Yeah, so the megawatts come from company updates, company earnings reports, and we only have the latest of that information there. And a couple of the miners had to reach out and ask them. So with Bitdeer and they have significantly bigger businesses apart from self-mining. So it would be unfair to include, in terms of Bitdeer, say 895 megawatts when they've only got effectively 8.1 excess of hash rate. That would skew their number significantly. So we're able to get a number calculated from them, and HUT also gave me their self-mining number as well in terms of megawatts of power. So once you've got the megawatts of power applied for self-mining, you can then calculate how many Bitcoin per megawatt was produced during the month, and it comes out, as a nice metric. It's a balancing metric, just like the Bitcoin mine per exahash. Exahash is a constant metric across all the a constant deliverable across all the miners. There's no one big difference. And actually, again, on an even playing field, these should all be the same number. They should all be the same amount. So this really highlights who's utilizing their megawatts to deliver more Bitcoin, and maybe where some have got more capacity available with the megawatts that they're saying. So. Bit Digital, they're the only one to achieve more than 1 Bitcoin per megawatt, but IREN, CleanSpark, Hive, three of the sort of like of the top tier in terms of production, doing really well. Wulf so Wulf actually came in top in terms of Bitcoin mined per exahash, but in this time here, they're actually in fifth place. So, not really correlated to the Bitcoin per exahash. This is a different metric altogether. So this is probably, you could argue, a better metric to use. This is how much you're utilizing the power you've got available to deliver Bitcoin. So how many Bitcoin is your power delivering rather than your machines? And the ones again with DMG, that's going to change because they obviously they nearly doubled their hash rate in months. So it's effectively we'll see that one change for October. Core Scientific, again, they've been the issue with Core Scientific is, that their megawatts, they do have megawatts they use for some of their hosting and for some of their HPC agreements. So it's not a fair representation there. Riot is down for one reason. We know that Riot have got issues at Rockdale and also with likes of course Corp coming online there. They've only got, I think, 300 megawatts at Corsicana. They've got 700 at Rockdale. They've also got 120, I think, at the Kentucky site as well, which they purchased from Block. So they're not getting the level of Bitcoin, but we know they've got production issues at Rockdale and facility issues there that they're addressing at the moment. So that one we'd expect to start rising. But yeah, it's a good metric, and we'll see now which miners start telling us exactly what megawatts they've got available rather than what we pick up from their earnings report. So it's going to be interesting to see how they take this one. But yeah, it's a new metric for this month, and I'm glad we've included it.
I am too, and I'm hoping we can start to shift the discussion from exahash to megawatts here as these companies continue to diversify. But as you say, Anthony, on the monthly updates, a little bit of the information's missing. Hopefully on the earnings or the quarterly earnings, we can start to piece together a more holistic view here. Now, speaking of a holistic view, the final table we have here, Anthony, is a really nice summary of Bitcoin mined per exahash by month. So you can compare and contrast these miners over an extended time period. Bitfarms coming out on top, as we've talked about in a number of prior monthly updates. Can you walk us through this one and any standouts you may have seen?
Yeah, we'll just cover this one very briefly because this one comes out every month, and to be honest with you, Bitfarms and Hive have been the top two. I suppose with IREN as well as maybe the top three for most of this year. Bitfarms and Hive definitely top two for this year, and they've been the top two over the last 3 years. So no difference there. The one standout feature of this table now is the gap is closing. I've had to go now to the average and go do it by 2 decimal places because 1 decimal place wasn't really separating some of these out there. If you look at Bitfarms there and Hive, all it takes is maybe a slight improvement by Hive next month, and they overtake Bitfarms for the first time this year. IREN aren't too far behind. TeraWulf and DMG and even Gryphon aren't too far behind. A couple of good months from those two miners in the last 2 months of the year or 3 months of the year, and they could finish top as well. But overall, one thing to say about this table is the gap is definitely closing. So miners are getting better at delivering hash rates, and it looks like there's less curtailment, less maintenance, and so it's all good. We know that some of the miners at the bottom they've had their issue. We've already talked about that through the podcast, so we're not going to dwell on that too much there. But you can say arguably that the top 9 or 10 are really close together. And actually, if you even look at 11 and 12, they're not too far away behind either. A couple of good months, and this will tell you also, looking at them month by month, who's actually starting to improve. Some of them might have started off badly and started to improve. We've seen some of the miners start to increase. I think Bit Digital has started to increase their performance, and therefore they're moving up the table there. So it's a good league table to have. There'll be bragging rights at the end of the year. Bitfarms had it last year and Hive the 2 years before that. So will Bitfarms have a second consecutive year, or will Hive get there? I know where my money is, but I'm not going to explain this podcast.
Hey, who doesn't like a bit of healthy competition? And that's actually a perfect segue to the next portion here, Anthony, an update on our Q4 Miner Madness competition. Now, I want to talk about a few things here. Number one is the companies that are leading the pack here. But before we do, as of yesterday, Anthony, we have over 300 applicants in this competition. And one of our viewers actually pointed out that every single one of the entrants was in the positive territory or green. Now, this was as of yesterday's close. So I know you're looking at a more up-to-date version, Anthony. But that being said, what a tremendous competition. And really, everyone in here should be very proud of their picks and the fact that they're in the Bitcoin mining space at the right place at the right time.
Yeah, absolutely. I mean, it's so close. I mean, there's only, even at today's live prices now, there's only a couple outside of 300. But for those at the top, getting well over 30% return on what 23 days. It's amazing, really. So it's so close. I mean, if you look at where the analysts are, they're spread across the whole competition, but it doesn't take much to move. It's moving, those analyst positions have been moving, rapidly throughout the day, every day, because it just takes one share to perform well, and the whole table changes. But the top 2 or 3 there, if you've got the likes of CIFR and Riot and TeraWulf and Soluna in your 3, or 2 of those in your 3, you're doing really well, because all those 4 stocks are over 30% up since we started the competition. So it doesn't matter where you picked them first, second, or third. If you've got 2 of those 3 in your group, you're doing quite well, and you can afford to take a stock that's maybe not doing so well. But majority of stocks are in profit. So I'd say 75% of the stocks are in profit, and those that aren't in profit are starting to recover as well. So we've seen a lot of recovery in the mining stocks. Some really good performances, as I said, already highlighted the 3 or 4 stocks that have gone over 30%. But even the likes of Hut 8 and Hive Digital, both close to 20% up in the last 3 weeks. That's great performance. 20% in 3 weeks. Certainly worth looking at and covering those stocks there. But yeah, great competition, and we can also see from the traffic coming to the website that people are going in there looking at the leaderboard and finding out where they are on a regular basis, because the traffic numbers coming to the website have improved dramatically since the competition started. Really grateful for that, and hopefully we carry on doing it.
Yeah, what a good idea I had for this competition, eh, Anthony? No, just kidding. This was your idea. However, I am still holding down first place in terms of the analysts, so I'm hoping I can edge you out. We're, as you say, about 22 days into the competition. Now, I just wanted to throw up a couple more visuals here, Anthony. These are basically share price performance since the start of the competition up until close yesterday. And as you say, some of these companies now up in excess of 40%. Most people, including myself, would be happy with a 20% return for an entire year of investing. And the fact that a lot of the entries and contestants and companies are already exceeding that in 20 and change days is truly incredible. So go in, you guys, make sure you take a look, live standings. Let us know in the comment section below if you're managed to be in the top 100, at least at today's prices. If you're still watching the video, make sure you hit the like button, you guys. It helps get this content to other people who may find value. Feel free to subscribe. We're so close to 46,000 subscribers. We'd love to have you as part of the community. That's all for now. Thanks for watching. We'll see you here tomorrow.